All right, so let's get rolling today. I haven't looked at any charts yet aside from my dollar yen trade, which is you guys remember this from yesterday. We're hovering near targets, not quite up there. Got about 12 pips to go, so hopefully we can get up there and get some go 1 for 1 this week and drop the mic. But on the radar today for news events, we have core durable goods at 8:30. Again, this will be right when we're closing down shop, so it's not going to really affect us too much. But you do want to keep an eye on core durable goods. Unemployment claims, again, I don't think that hasn't had much weight in the last few years. I don't think we need to concern ourselves with that. I was looking at this morning. If you remember, guys, Aussie Cab, we talked about this yesterday. I was looking for a buy if we were to got a higher high, higher close as we held at this support level. However, we did not hold, so I stayed out of the trade. And that's something that a lot of traders don't see. Well, you get a lot of traders that only see half the story. I know Jason Greystone posts a lot of charts on TradingView. I try to share at least once a week on TradingView. Do you guys ever share your charts publicly, either TradingView or Twitter or anything like that? When I'm not banned. Yeah, what did you get banned for? Were you shamelessly promoting yourself? That's what I told someone. I said, he's probably shamelessly promoting himself again. Yeah, well, yeah, Johan's on there all the time. Here's what people don't see, right? We see stuff like this, and we talked about this yesterday, and we developed this kill zone, and we say something like, hey, guys, we're looking at this retest of support. This looks a lot better on the 15. We're looking at this level of support for a potential buy, and we shared a chart. Now, to the novice trader, they come in, they see the chart, and they automatically assume, oh, Johan's going to buy it right there, right? As soon as the market goes into a circle, he's going to buy it. Where what we really do is that's our kill zone. Once price action, I should say it this way, if price action gets in that kill zone, then we're looking for our reason to enter, right? And we're smart traders. We've donated enough to the market in the past to learn that, you know, there are some times where it's worth being very, very aggressive. There are some times where it's worth being conservative. So we wait for this area. We see if the market gives us our reason for entry. If it doesn't, we never get involved in the trade. But you'll see the people, they'll yell at us, hey, didn't you take a loss on there? No, I never got involved. Oh, you're lying. No, it's called smart trading. We're just not firing off the hip, man. We're lining up the target. We're waiting for it to get in our lines and our crosshairs, and then we're firing. So I wanted to bring that up. I see that a lot. Johan says, Akil, did you say you used to play school football? Yeah, I was played for the same AAU team as Kobe Bryant. And we didn't play at the same time, but we were on the same team. Sam Rhines. So that was pretty cool. All right, so first level is right here that we were looking for on the 60-minute chart. We're looking for, if you can imagine, it was the low of this big green candle. Where do you think the next level I would be aiming for a potential buying opportunity? Or I guess the next zone. Everything works in zone. Yeah, the next outside return. So technically, again, this was our starting point right here. This was the top of our zone, right? Our previous new structure high. You guys all see this, right? New structure high right here. Our previous outside return, right? So this is still the area in which we're looking to get long, which I would be looking to get long. Now, obviously, the lower, the better, because I want to have stops below here. This is the optimal place to put stops, so the lower, the better. But this is the area where I'd be looking for an opportunity to get long based on the 4-hour chart. Now, again, you always want to keep in mind, right? Keep in mind on that daily chart, on that weekly, we still did hit resistance, I believe. So this is not one of those cases where we're just in no man's land. And sometimes you do that. You don't load up enough data on your chart, and you're like, oh my gosh, these are the all-time highs. We just broke it. Buy. We're going to continue forever. And then you load up a few hundred more days. And you're like, oh, there's major structure there. Oops. Kind of like with the pound, how, you know, we were looking at it. It's like, where's the structure at? And it was like, I don't know how many years ago. Now, again, here's the thing with the euro. Not a bad level right here. Not a bad level up at 109.68. The problem is this wick. You know, again, this is we look at the highest point of structure for stop placement. If we're taking any type of trade here short, we've got to get stops above this wick right here. Now, if you're just looking for a pure movement up, where can price go? I always like to bring in a one-to-one measured move and say, well, if the market's moving harmonically, there goes that word again. If the market's moving harmonically, right? We could see a move up to this level right here, 109.88. Again, what you need to be careful about is just stop placement. Stop placement. Really difficult to get a true stop placement on this type of trade. Now, I think we're going to be... We do hit a 50% retracement. So depending on your rules for trading bat formations, you may have a potential bat as well, and that's going to put you a little bit higher. If all you require is a 50% on that C leg, you're in business. If you require a 618, you're not in business. But we can look at this and say X to A, swing high to swing low, A to B for you advanced pattern formation traders, B to C, and a C to D right up here at 110.16. You can see that puts us a little bit closer to that spike. Now, once again, stop placement, guys. Stops need to be above where for advanced pattern formations? Ugh. Hate it when the coffee gets cold. Above X, right? So should I put stop loss right here? What do you guys think? Just a little above? No? Look left, right? Let's get it above that structure level. I offended a lot of people last week with my dollar Canada trade. Keel, how did you survive that? Why did you put stops down there? I thought it had to be below X. Well, there was another level of structure there, so I got it below that level of structure, and it saved my behind. Again, pricey lessons learned. And hopefully I can pass it on to you guys. You guys don't have to invest. You don't have to invest in as much in your future education. That's what I call it. Each loss is an investment if you learn from it. Kind of like I loved your post the other day, Greystone, about he put a post on Instagram about how I like making mistakes because it allows me to learn. He's like, can't wait to make my next mistake. I love that. I need to get a t-shirt. I can't wait to get my next mistake. I can't wait to make it. That's a learning opportunity. That's putting a positive spin on there. That's awesome. So yeah, potential bat formation. Let's get this into our syndicate. We're looking at 110.16s here for a bear bat. Where's my syndicate chat? Put the bear bat in the syndicate chat. Look at that. I got rhymes this morning. All right, so we're looking at euro dollar. What's it, 4 hour? We're on. Euro dollar 4 hour potential bear bat 110.16. Euro dollar 4 hour potential bearish. Bat formation at 110.16. There we go. Put that on the radar. If we go down to our 60-minute chart, we may have a bullish bat as well setting up. May have a few different pattern formations depending on how you're lining this up. If you're looking at this as a single impulse leg, swing low to swing high, you're going to have that potential bat. Looks like you may have a potential Gartley as well. X to A, A to B, B to C right here currently. Looking for a CD completion down at 108.61. Let's go ahead and make this a different color. Let's make it gold. Austin Powers, right? The single good thing the UK has ever provided to us. Oh. Shots fired this morning. Woo. Yeah, baby. apart from Greystone, of course. Unlike America, where we have we've got Rambo and Clint Eastwood and Chuck Norris before he shaved the beard. I can't take Chuck Norris seriously anymore without his beard. Yeah. So, catch up, guys. Catch up. You got James Bond, right? Soft behind secret agent. Give me a Rambo. Let me come in guns blazing. James Bond does get the ladies, though. He does get the ladies. Oh, you got one of my favorite guys, Idris Elba. All right, Yeah, so potential bat formation here as well. If we were to take this leg, right, we're gonna take this as our X leg in here. It's inside move. I can certainly see you taking both of these as impulses. You're gonna have, looks like a Gartley formation as well as we get back to trading. So you're gonna have a deep Gartley as well. Let me just measure this out. So a handful of pattern formations, potential pattern formations here as well. X to A to B, B to C, C to D right here at 108.76. Running out of colors here. Let's make this green. So 108.76, you have a potential bull Gartley. 108.61, you have a potential bull bat. Aussie, Aussie, Aussie. On the daily, it's going down to the 240. Our 4-hour chart here. Still looking for our potential Gartley formation here on Aussie. Approaching that B leg. Going to be a butterfly as well for some of you guys. So either an X to A to B, B to C, C to D right down here, or same completion point, but an X leg right up here, X to A to B. That was a waste of color. X to A to B, B to C, C to D down here if you're a butterfly trader. But same completion point. But looking for that move to 75.46. You can also look for, you can also look for 26.18. So you 26.18 traders, you have your double bottom down here. Price action coming down, boom, retracement, right back, higher high, higher close. You have your retest right back into that 618. Again, either you've aggressively bought at the 618, or you're looking at this as your potential reversal zone right in here for that 26.18. Let me just shoot this back in. Or did we shoot Aussie in here? I don't think we did. So let me just shoot this back into trade for Aussie dollar potential Gartley formation here. Aussie dollar 4-hour AUD USD 4-hour potential bullish Gartley formation at 0.07546. There we go. Now 26.18. Here's a technique you can use. How many of you guys trade 26.18s? Let me do a poll question. Actually, that'll make it easier. 26. Do you trade 26.18s? Yes, as a strategy, not as a strat, but can use them. Not at all. Let me see what you guys think. Come on, dollar yen. We have about 13% as a strategy, 56% not as a strat, but I can use them. 29% not at all. Cool. All right, so if you're someone that's using this, if you're not an aggressive trader, meaning you don't simply put a limit order at the 618, what I say, or what I would advise, is to go down to a lower time frame. Once price action enters that kill zone, once price action enters that kill zone, go down to your lower time frame. So go from the 4-hour to the 60, and then look for a potential reason for entry. Whether it be a higher high, higher close. If that's the case, you have a higher high, higher close candle right here. after your 618, or whatever you may need, a doji, a pin bar, but look for your entry reason, or look for a reason for entry within that zone for a more conservative approach. Remy says, not at the moment. For me, I would like to implement them into my trading for when I miss double tops, double bottoms. Yeah, and that's an excellent way to, that's what we teach it as. It's either an alternative approach to a double top, double bottom for if you missed it. Plenty of times where you've woken up and it's like, oh man, it happened overnight without me. Or it's just a more conservative entry where you're in a situation where it's like, I want to really, really, really make sure the market's going to hold. Yeah, we're gonna have about 4 minutes left. So if you have a pair you want to take a look at, David, we can run through it. I don't see much here in the Kiwi, so we have about 4 minutes left. So yeah, if there's something you guys want to take a look at that we haven't done so already, let me know. We have ran through my portfolio in record pace. Again, we didn't do any day trading time frames. We just did the swing trading time frames. But this is essentially, guys, this is what you saw today. This is essentially my morning pre-market analysis, going from daily 4 hour 60. This is essentially what I do every day before the live room, and then every day after the live room at some point. So you see, it doesn't take too long, and you minus the talking time. I do talk to myself some, but you minus the talking time, I can get through an analysis, especially in slow markets. I can get through easily in a half an hour. So for you guys that are going to be swing traders that are worrying about, hey, do I have enough time to trade? Can you put aside 45 minutes in the morning to do your analysis? Can you put aside 45 minutes at night to do your analysis? That's really all it takes. Obviously, depending on your skill level as a trader, how quick you can run through pairs, and also how big your portfolio is. When I was trading a 20 pair portfolio, it took about an hour. To do it. When I was trading only a single trading strategy, it took maybe 20 minutes. So it depends on a lot of things, but time shouldn't be an excuse. There's always time. Yeah, I used to trade 20 pair portfolio. Yep, crazy. I didn't trade as many strategies though. I only traded I was only trading advanced patterns. I think I did trade a 20 pair portfolio at some point when I was trading. I think I was doing advanced patterns in CTS. It got out of hand. Trust me. I had a good friend of mine, good trading buddy of mine, Roy Painter, and we would talk a lot. He was doing the same thing, and every 6 months or so, we talk to each other and be like, dude, we gotta trade less pairs. This is getting out of control. And then we'd say, like, okay, we're going from 20 to like 10, and then like a month later, we'd be right back up to 20. You have the trading urge, and it's like, especially during slow markets when nothing's going on, it's like, all right, well, let's add some more pairs to the portfolio. But eventually, as I got deeper into education, this was also back when I had all the time in the world on my hand. Before I was a full-time trader, I wasn't teaching, so I just traded all day. So I had I can do 2 hours of analysis in the morning, no problem. I had nothing else to do all day but trade, a full-time trader. When I started teaching, I cut that down because obviously time becomes, there's less time. Less time and 20 pairs. There's not enough time to focus on 20 pairs and teach and mentor and coach and do all that stuff. So I cut it down, but it was to save myself from the workload. 20 pairs was ridiculous. I was way too overexposed. I had a very, very small position size, but way too overexposed. And there would be times where I would be involved in 8-9 trades at the same time. And, again, very, very small position size, but a little bit more risky, especially when you look at the correlations within those pairs. So, all right, guys, it is it was hectic, but again, I had nothing better to do. Like, my job was to trade full time. So I would wake up and my job would be to trade and then go to sleep and then trade again. So I had all the time in the world, and I wasn't a day trader. So all I did was swing trade. I wasn't a day trader. I wasn't doing lower time frames. I was just swing trading. So I had plenty of time. Time wasn't an issue because I had time. It was just the confusion. It was stuff like I had a full whiteboard dedicated to keeping track of what pairs I was in and what I was watching. That was the hard part. 20 pairs, and then every once in a while you forget, oh crap, euro dollar, oh man, Aussie Swiss, and you forget about opportunities, and that's where it runs into trouble. Must have been very profitable too. Well, I'll tell you this: there's no correlation between the more pairs you trade and the more profitable. If anything, the more pairs you trade, the more risk you're at of sabotaging yourself. So less is better. So appreciate you guys joining me. I'll see you guys tomorrow. Until then, plan your trade your plan. Take care.